History of Accounting, prepared by Mary Giselle Cabigon and Diadem Grace Ong. Knowledge in accounting is immensely useful today, especially for those individuals who are engaged or interested in business. It has become one vital process that an entrepreneur needs to consider before making decisions. But have you ever wondered where accounting originated and how it has evolved in response to society's shifting needs? Well, today we will find out. Accounting can be traced back into the dawn of human civilization, when people felt the need to keep track of the quantities and relevant values of agricultural goods. Accounting is even mentioned in both the Christian Bible and the Quran. Even Kautilya's Arthashastra discussed the art of account keeping. Take a look at this. In Mesopotamia, the ancient civilizations generated some of the oldest known records of commerce, or proof of such conduct through the use of clay tablets. In these clays, the scribes wrote the names of contractual parties, the commodities and money transferred, and any additional commitments made. In Egypt, Egyptians created a system of accounting similar to Mesopotamia's, but instead of clay tablets, they utilized papyrus. In the pre-Christian China, accounting was also used to assess the effectiveness of government initiatives and the public employees who implemented them. In Greece employed public accountants to give its citizens actual responsibility and control over the government's finances. While in Rome, Romans used accounting to record daily household revenues and payment. 1339. The double entry system. The mercantile records of Friar Espones of Montalban, dated in 1339, are the oldest documented examples of the use of the double entry bookkeeping. In 1458, Benedetto Conradli wrote the first book of accounting, entitled On Trade and Perfect Merchant. However, the book was published 115 years after it was written, which is in 1573. That is why Conradli was not given credit for authoring the first accounting book. And in 1494, Father Luca Pacioli, commonly known as Friar Luca del Borgo, authored Summa di Arithmetica, Geometria, Proportione et Proportionalita, or in English, everything about arithmetic, geometry, and proportion. This is the first book to be published with a thorough chapter of double entry accounting. Pacioli is also known as the father of modern accounting. Pacioli also employed the terms debito and credito, which were derived from the Latin words debitor and creditor. It's debit and credit as we know them now. He also pioneered the use of essential accounting records such as the memorandum book, journal book, the ledger book, which we still use today. He presented a method that encompasses the majority of the accounting cycle we know today. He detailed the usage of diaries and ledgers and advised that one should not go to bed until the debit equaled the credits. He was in favor of shutting accounts at the end of each year. He also emphasized the need of measuring profit or loss at a regular interval. He also recommended creating an inventory or financial condition of a firm, which is now known as a balance sheet. In the 1700s, during the French Revolution, the study and development of accounting began. It has been used and connected with many different disciplines, including law, finance, governance, and customs. During the Industrial Revolution from 1760 to 1830s, mass production and the importance of fixed assets were given special emphasis as factories and enterprise in Europe began to grow.
In 1854, Queen Victoria awarded a Royal Charter to the Institute of Accountants in Glasgow, establishing the official accounting profession in Scotland. As a result, the profession of chartered accountant was established. In the late 1800s, chartered accountants from Scotland and United Kingdom visited the United States to audit British interests. Some of them stayed in the United States, set up accounting practices, and founded many accounting businesses. In 1887, the first National Accounting Society in the United States was established. Accounting standards for accounting professionals were published by the American Association of Public Accountants, a predecessor to the present American Institute of Certified Public Accountants, or AICPA. Notable processes including mergers and acquisitions, as well as the expansion of international businesses, were created. The strategy of expanding firms through acquisitions pushed accounting experts to create new standards to handle accounting difficulties associated with these business combinations. The accounting profession grew up around state obligations for financial statement audits in the 20th century. The government also establishes accounting standards through legislation and regulatory bodies such as the Securities and Exchange Commission, or SEC. Accounting regulatory authorities mandated that accountants follow international accounting standards. Today, investors are looking for investment opportunities all around the world. Businesses all around the world are feeling the need to go global in order to stay competitive. Accounting professionals are increasingly adhering to a unified set of global accounting standards in order to improve the openness and comparability of financial data across borders. Accounting and auditing procedures in the Philippines are heavily influenced by those in the United States. The Philippine Institute of Certified Public Accountants, or PICPA, was founded in 1929 and is only of Asia's oldest professional accounting groups. Professional accountants now audit and create financial papers and tax forms for customers, as well as interact with the data of various government authorities. Did you know that the Philippines accounting system dates back to our forefathers when we traded goods and services with the Chinese, Indians, and Malays? During this time, accounting was just a matter of exchanging money between hands. When migrants from the West began to arrive, this simple method of buying and selling grew into a more refined state. In 1890s, the accounting practice in the Philippines was greatly influenced when the Americans arrived and started enterprises in the nation. Business schools arose first to provide a pool of accountants for American companies and subsidiaries. In 1923, the Philippine government recognized accounting as a profession in 1923 when the Board of Accountancy, or BOA, approved the Accountancy Act. The Certified Public Accountant, or CPA, certificates that we know today were created as a result of this act. Facts about Philippine accounting. The International Accounting Standards and the U.S. Financial Accounting Standards Board are used to develop the majority of accounting policies in the Philippines. The National Internal Revenue Code, Statements of Financial Accounting Standards, or SFAS, and the Securities of Exchange Commission should be all followed when it comes to financial reporting and transparency. The SFAS, for example, necessitates BaSin. Although international practices had a later influence, several aspects of the Philippine accounting system still resembled those of the United States. Accounting processes, for example, are governed by both government and institutional rules. Professional accountants now audit and create financial papers and tax forms for customers, as well as interact with the data of various government authorities. Thank you for watching.